So the fifth and final stock that has proven to be recession, depression, and pandemic proof is... Oh my God, the stock market's crashing. All my airliners are going through the floor. I can't believe they wouldn't keep going even though they're burning through billions of cash every month. What am I gonna do? I'm so emotional. What's going on, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I made it my mission to help you own it, make some money, and make a positive impact on your life. People are going absolutely bonkers again, and if you are one of them, please continue to watch this video because the market pulled back after its ridiculous run. And it was ridiculous. We talked about this though, right? About a month ago, I explained how even then the market seemed to have been getting ahead of itself, and it may be wise to have a decent amount of cash on hand for an inevitable pullback. And yes, my opinion still remains that this is a pullback, and it's super healthy for the market. No, the world isn't ending, and yes, I'm still bullish on the market, and in fact, my bold prediction for the S&P 500 to hit $3,500 before the end of 2020 is still in play. But in the event that the world is ending, I have 5 stocks that you just can't kill, and they have proven it, pandemic or otherwise. By the way, let me know what your bold predictions are, bearish or bullish, in the comments below. Also, make sure you're watching till the end of the video, as I do have a list of 4 bonus stocks that didn't make the cut, but are definitely worth taking a look into as well. Okay, so the first one's going to be Amazon, ticker symbol AMZN. It's currently priced at $2,600, and this has been a company that was on my list to be one of the top stocks to own for the next decade from the start of this year. Look, this stock did not give a rat's ass that the Rona was in town. 40 million people without a job. Bezos says, no problem. We got plenty of work for you to do. According to Amazon, through June, Amazon expects to invest approximately $4 billion on Rona-related expenses to get products to customers and keeping their employees safe. In March and in April, they announced hiring plans and have since hired 175,000 people in their fulfillment and delivery network in response to increased customer demand and to assist existing employees. 175,000 additional employees, people. That is absolutely crazy in the time that we're living in right now. While many companies are laying other people off and America is seeing unemployment numbers we haven't seen since the Great Depression, Amazon is hiring hundreds of thousands of people because demand just continues to increase. They keep updating the number of employees they either plan to hire or are hiring every single week, it seems. They've gone on to say, quote, "We've extended the increased hourly pay outline through May 30th. We are also extending double overtime pay in the US and Canada. In addition, we are providing flexibility with leave of absence options, including expanding the policy to cover the Rona circumstances, such as high-risk individuals or school closures." They go on to say that we continue to see heavy demand during this difficult time, and the team is doing incredible work for our customers and the community. Yes, incredible work, Bezos. Incredible work. In his 2020 letter to investors, Bezos threw it back from his original 1998 letter stating that this is day one for Amazon. Amazon has plans to include cashierless grocery stores, thousands of electric delivery vans, which could very likely put one or more delivery parcel services out of business, in my opinion. And it also has a goal for its business to be carbon neutral by 2040. So what's in store for Amazon? With a mission to be the world's most customer-centric company and a drive to innovate, along with its supposed immunity to respiratory diseases, the company will likely be at a much higher price than it is now in a decade. I think this stock will be priced well above $3,000 by the end of 2020 and is a solid buy almost no matter where it's at in the near future. Okay, so the second stock on this list is Apple, ticker symbol AAPL, which is priced at $340 as of this recording and had a significant pullback from its recent all-time highs, nearly $355 per share. Apple is one of the biggest brands in the world, as we all know. They have likely one of the largest amounts of cash in its balance sheet at nearly $200 billion, and they are ready to deploy new value-creating investments, and this gives me confidence that Apple will not only be a survivor, but a thriver through any situation. Apple continues to diversify their business, and the streaming service market becomes the new growth opportunity for Apple. Given a huge number of Apple product users, presenting its Apple TV Plus streaming option will be a lot easier for them than it will be for their competitors. Not only that, but one of the biggest areas that Apple is improving upon that gets overlooked quite a bit is what they're doing in the medical field, particularly with telehealth, which, as we all know, has been crucial during the time where social distancing has been a thing. Although anyone who knows me knows that I've been practicing social distancing before it was cool. Just saying. Anyways, Apple's telehealth technology helps doctors work effectively within hospitals, connect remotely with patients, and conduct groundbreaking medical research. Apple has said that the result of their efforts is that care becomes more efficient, more personalized, and ultimately more human. I would like to add here that during the time of the Rona, it's also safer too. All right, for the next one here, it's going to be PayPal. Ticker symbol PYPL is currently trading at $154 a share as of this recording, on a slight dip from its all-time highs. Now, don't let this number scare you. Remember, it just survived an economic shutdown and absolutely crushed it. My spin on this isn't going to be because of how they survived the Rona, but let me give you some numbers here before I get into why I really see value in this. The company netted a 135% increase in new active users and a 20% jump in revenue in April. It also recorded the largest single day of transactions in its history on May 1st. PayPal CFO John Rainey has stated recently the number of new customers that have coming into the platform have been absolutely insane. He's quoted as saying that in 2019, on an average day, we'd have about 100,000 new users, which is still a mind-blowing number to me. In the period beginning at the end of March, it's been twice that. Absolutely crazy. He went on to say that some days we've even seen as much as 250,000 new users every single day. That is just wildly insane growth, people. But as I stated earlier, what I'm looking at is more of what they learned coming out of this situation. And what's going to continue to make PayPal more valuable is going to be their ability to create frictionless transactions. How many of you go shopping online, put a bunch of items in your cart, and never actually check out or buy them? Upon some of my research, it looks like a lot of you. Worldwide, cart abandonment is right around 75%, with that figure jumping over 85% on mobile devices. And while there are quite a few reasons for this, one of the most common is friction at checkout. Retailers like the aforementioned Amazon and even, yes, Apple take the pain out of payment and often see higher sales that way. And one of the largest leaders in this concept is actually PayPal. At a time when the majority of shopping experiences begin on a mobile device, even more so now than ever, there is a huge level of abandonment because people don't want to put in their credentials. We've all been there, right? You go to buy something and then have to go look for your wallet, but then your wife reminds you to take the trash out for the 8th time. You get a phone call, you got to get the kid to bed, whatever. First world problems, right? But it's just the truth, and there's statistics to actually back this up. There's a very low conversion among those shopping experiences that don't make checking out seamless. With PayPal and people who use PayPal, they see the highest rates of conversion. In fact, it's 2 times the industry average. PayPal is quoted as saying that we provide frictionless, one-touch payment options, and PayPal's survey data shows that among their subscribers, around 65% have abandoned transactions because PayPal wasn't present, and 54% are more willing to buy when PayPal is there. That speaks volumes, and if businesses and merchants start seeing that kind of conversion increase, that's also only going to increase the value of PayPal. Yes, there are other services out there similar to PayPal, but when it comes to brand recognition and trust, PayPal is still king in my opinion. Up next here is Facebook. Ticker symbol FB was last trading at $227 a share, which is a pretty fair pullback from its recent all-time highs at $241 per share. During a time in which everyone thought Facebook was going to take a serious drop in revenue due to ad spending, literally the exact opposite happened, and I think this is going to be a very interesting time. Back in the day, if you wanted to get your name out there and you were a fairly decent-sized company looking to grow, you would create a budget for ad spending and look to 3 major companies to air your ads on TV or even the radio. You may know them most commonly as CBS, NBC, and ABC. Now, it's been a huge shift as the digital world continues to take over TV and radio advertisements. Let's not even talk about the paper anymore. I mean, I bet there's some of you out there that have never even opened a paper in your entire life, which is kind of crazy to think about. Let me know in the comments if you've never looked at a paper ever. Anyway, the new big 3 in advertising is Amazon, Alphabet, or Google, and yes, Facebook. These are going to be the new 3 big players in this space. Although, don't count out Pinterest either. but that's another topic for another time. Aside from the revenue they bring in from large and small businesses that spend money on ads, Facebook has been reverting back to their mantra of move fast and break things, and most recently it revolves around venture capitalism. Facebook had created the NPE division last summer to test out ideas for new products and services that could potentially compete with just about everyone. So far, the team has released a few new apps, including Catch Up, which is audio calling, and Kit, which is also smartwatch messaging. The company has been hiring highly experienced talent in the tech industry who will be tasked with managing a multi-million-dollar fund that would invest in startups, according to the report from Facebook themselves. It is yet to have been determined who Facebook has hired or how much money will be in the fund just yet, but Facebook has over $60 billion in cash on the balance sheet at the end of the first quarter, and I think they intend to spend a lot of it on this venture capitalist stuff. And we all know very well that Facebook is no stranger to quality acquisitions. After all, we all know them, IG, WhatsApp, and others, and on top of that, they blew away profitability expectations through the Rona. Facebook, to me, could easily see $400 by the end of the year, and no, that's not a crazy number. Okay, so before I get into the fifth and final stock that I think is everything proof, I want to invite you over to the Chaos Crew. If you're liking the value you're getting from this list so far, click the join button next to subscribe, and you will get lists like this every single day before the market opens. For $4.99 a month, I think it's an incredible value, and if you do as well and would like to support this channel, I would love to see you there. So the fifth and final stock that has proven to be recession, depression, and pandemic proof is Netflix. Okay, yes, I know 3 out of the 5 stocks on this list are FANG stocks, but have they not proven that they can be trusted even through the toughest of times? Netflix, ticker symbol NFLX, is currently trading as of this recording at $420 a share and is one of the few companies that actually benefited from the Rona. And no, this won't lose value or subscriptions just because people are going back out and back to work. It was doing well for years long before this happened, and to be honest, I was even skeptical when everyone and their mother started to put out streaming services. But Netflix has remained on top despite all that. Netflix has been able to build relationships digitally by tailoring shows that you would want to watch, and that's one huge thing that's made them so powerful. Netflix offers nearly everyone something that they love watching. It excels at finding great storytellers and is tying the world closer together by sharing these stories worldwide. Now, you might be looking at this and thinking to yourself, Netflix just seems like it's too big. Can they even continue to grow at this point? But with not even 200 million subscribers yet, out of at least a billion that are possible, there is still plenty of room for Netflix to grow. Now, for some honorable mentions here, as promised, I like Shopify, Trade Deck, APN, and MasterCard as well. And let me know in the comments what you think of this list too. In the meantime, if you didn't catch this video about the top 5 stocks that are under $10, click that video and check it out. Or click this one if you haven't seen the top 10 stocks millennials are buying right now. Oh boy, check that out. You're not going to want to miss it. And as always, folks, I will see you all before the bell, and B. Smith is out.